Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Shrishti Sharma. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But before we get started, let's look at where the markets are at. Shrishti, another day of record highs, but we have given up all those gains. But Bank Nifty is where the outperformance is, which was yesterday as well.
Well, certainly, Ankita, and feels like the second half could be even more exciting because, yes, the trend has been clear since the start of the day. There was indeed a fresh record high coming in for Nifty 50, while for Bank Nifty as well was very close to its all-time high levels. But we have come off the day's highest point. But other than that, if you look at some of the counters that are still holding on to the gains, then NTPC indeed top on the charts, almost 3% gain coming in for NTPC, holding on to the gains. Nestle in the half an hour or so has inched up with a 2% gain coming in. Maruti Suzuki has seen a decent rebound, 1.5% uptick there, as well as Tata Consumers and Titan are some of the counters that are showing up move. Other than that, on the flip side, it's the oil-related counters like BPCL, ONGC, they are all drifting lower. Other than that, Adani Ports is also down close to 2%, and Coal India, HCL Tech, Adani Enterprises, some of the other drags. But all in all, what we can say is that the markets are still in that digestive mood. They're digesting the big announcement that the Fed has come out with, but that's the similar kind of move that we have seen in the US markets as well, and feels like that the Indian markets are also following the suit. So the second half, like I mentioned, could be even more interesting to see whether we hold on to these gains or some more profit booking and kick it.
Absolutely. Second half has been more interesting, over the past few sessions. In fact, the whole tables turn in the second half. But let's wait and watch if we can reclaim those levels yet again. But let's get started with all those stocks that are in focus today. For that, we're joined by Ashish Kyal, who's the founder and CEO of Waves, strategy advisors on the technicals. And from our research team, we are joined by Gaurav. Hi, both of you, gentlemen. Welcome to Market Fatafat. Let's get started with all the stocks that are in focus. NTPC, like Shrishti mentioned, is the top Nifty gainer. In fact, the stock was up in the morning. Itself, it was trading with gains of over 4%. Right now, it has given up those gains, but it's nonetheless trading with gains of 2.4% right now. That's because NTPC renewable energy arm, NTPC Green Energy, has filed its DRHP with SEBI to launch its much anticipated 10,000 crore rupees IPO. The public issue will, it is likely to become India's largest in 2024. Will be entirely a fresh issue of equity shares with no OFS from the promoters entity. Now, the IPO will feature a quota for the existing shareholders of the parent company of NTPC with a maximum of 10% of the issue earmarked under this category. Now, investors holding shares of NTPC as of the date of filing the DRHP will be eligible to participate in the quota, providing an opportunity for all the NTPC shareholders to subscribe to the IPO. Also, Jefferies has come out with a note and is maintaining a buy rating on NTPC with a target price of 485 per share. They're citing strong growth in the renewable energy business. Jefferies' target price implies a 17% upside from the last closing price of 413 rupees. And on the back of that, NTPC is in focus today, buzzing with gains of 2.5% right now.
All right, but another stock that's on the flip side down in trade today, that is Exide Industries. Let's shift focus to that because Citi has come out with a note where they continue maintaining their buy rating but have slashed the target price to 560 rupees from 610 earlier. What they're highlighting is that there's indeed sluggishness seen in the auto OEMs volumes, and that's likely to impact the overall revenue growth, but not significantly. And in that space, Exide cannot be left behind from this moderation in the CV as well as passenger vehicle volume, where the industry is going on through this phase. However, the company is expected to benefit from the replacement demand. Now, on the flip side, growth in the OEM sales enter their first battery replacement cycle in FY25, and the lead prices have seen some moderation in the recent months. So that could be some of the tailwinds for Exide Industries. But on the back of the price cut that Citi has come out with, the stock is down more than 3% in trade right now.
All right, moving on then, you have picked out, Ashish, coming to you, you have picked out Nestle for us, a counter that hasn't really done much in the last 6 months. In fact, today it is one of the top Nifty buzzers. But tell us, what are you seeing on the charts for this one? Is it about time that Nestle started giving us good gains?
Hi, afternoon to you and all the viewers. If you look at Nestle, over past 6 months, it has been consolidating. And in today's session, it has given a very strong breakout on the upside, and the stock has managed to even take out the prior resistance of around 2600 level. And this breakout has come along with good volumes also. So there is a possibility Nestle can start a fresh trend on the upside here. towards the level of around 2800, which is the pattern target, and one can maintain a stop loss of around 2590 level.
All right, that's on Nestle. But Gaurav, coming to you to know your first basket of stocks rather, and that's the big story of the day. Indeed, telecom counters are in focus. Gaurav, take us through what has happened and what's the update regarding the AGR update and where are the stocks trading right now?
Well, yes. When specifically talking about the telecom sector, specifically Vodafone Idea is going to be in focus, and the reason being that now the AGR, now Supreme Court has rejected the plea for telecom player through which they were seeking computation of the adjusted gross revenue. Now, how is this going to impact the AGR is that AGR moratorium period now ends in FY26, after which the annualized installments would be around 1,75,000 crore rupees for Vodafone Idea for the next 5 years. Now, earlier brokerages were saying that if the favorable return comes for this, there might be a significant reduction in Vodafone's AGR debt burden, and there was a potential benefit of around 4 to 5 rupees per share. But now that there is a negative news coming up from the Supreme Court, now the stock actually, we saw the stock actually facing a free fall. It hit its lower circuit of around 10% earlier and declined even further. There is again, this news is negative for Indus Towers as well, because Indus Towers profitability as well as some recoveries are dependent on the survivability of Vodafone Idea. While JM Financials, when we talk about the brokerages, JM Financials have reiterated their target price of 10 rupees on Vodafone Idea because they do not factor in any kind of AGR relief. But when we talk about brokerages, we recently saw Goldman Sachs giving a target price of around 2.5 rupees per share to Vodafone Idea. So definitely a very negative sentimental news coming for Vodafone Idea. And on back of this, watching out on both these counters.
Absolutely, watching out on both the counters. Vodafone trading with cuts of 14% and Indus Towers trading with cuts of 9% there. But it has been a big setback for Vodafone Idea as the Supreme Court has rejected the company's plea to recompute the AGR dues. But let's go across and listen into what Balaji Subramanian of IIFL Securities and Sushil Choksi of Indus Equity Advisors had to say about the same. Let's go across and take a look.
My estimate is that the annual payout from next year, assuming that the moratorium is lifted as per original plan, would be around 16,000 crores. And that is just on the AGR front. If you add the spectrum payouts also, the number goes up to a much higher number. So the company has given these numbers. It would be around 28,000 crores in FY26. And from FY27 onwards, it would be around 42,000 crores. So these are pretty big numbers, and a favorable outcome would have reduced these numbers by around 8,000 crores. All that capex underway, even with the tariff hikes coming in and with an AGR relief, they would still have faced difficulties in making these payments, and it results in a hit of about rupees 5 per share. And now I think the key monitorable would be what happens as far as the debt raising plans of Vodafone are concerned.
In today's condition, Vodafone Idea will have to do some kind of a fundraise, which would be more from shareholders. Government of India, Idea, that is Birla Group, and Vodafone will have to shore up the balance sheet to strengthen, to repay this amount, unless the government gives time to pay out. And that's one possibility which can be considered by ministry at a later date. But this has happened for the companies, and I'm sure to survive, you have to earn more. And competition is already inching up with the tariff hike, and they're looking towards betterment. So if any kind of burden comes to one player, either you lose consumer base or all of them, three of them will raise the rates. I am sure the government of India's intent is to keep all three, specifically Vodafone, to exist, and they will make sure that all kind of support is there, because the shareholder also, they'll have to do something about it. So I'm quite sure that outcome will be positive. From shareholder perspective, it may be not positive for short term.
All right, so that's about the big news flow as well as the experts' take on the same. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back. All right, welcome back to Market Fatafat, and let's keep it going with all your the buzzers in trade right now. And let's go across to Ashish then to have his take on NTPC, one of the top gainers in Nifty 50 today. Ashish, NTPC, great move coming in, but what are the levels that you are hoping for, and what are your targets on this one?
See, NTPC has shown a very strong breakout today. There is some profit booking from the higher levels, of course, but I think the stock can consolidate here and can move towards the level of 450 on the upside. We can clearly see the move has happened with huge volumes that we can see in today's session. The gap is still so far sustained. So overall, the outlook is still positive. We can expect 450 as the target. On the downside, one can maintain a stop loss of 415 levels.
All right, moving on from NTPC to IREDA. Now that stock is also buzzing in trade, was trading with gains of 4% in the early trade today. It is right now, it has given up those gains, is now trading with gains of 1% right now. But it is on the back of the fact that, IREDA has received government's approval to raise up to 4,500 crore rupees through an issue of equity shares to qualified institutional placement. Now, the approval was granted by, DIPAM based on the recommendations of a high-level committee. And according to the statement by the company, the fundraising will be carried out through QIP route with a planned dilution of the government of India's shareholding in IREDA by up to 7% on the post-issue basis to be executed in one or more tranches. And now the fundraising exercise aims to strengthen IREDA's capital base, enabling the organization to scale its financing for renewable energy projects and further accelerating India's transition to clean energy. And on the back of that, IREDA is in focus today, trading with gains of 1% right now, cooled off all those morning gains of 4%.
All right, then that's about IREDA, but let's shift focus to some of the liquor counters, and specifically stocks like UBL, USL are in focus as Andhra Pradesh government approved the new liquor policy facilitating the retail sales by the private players effective from 1st of October. Now, the opening up of the large market like Andhra Pradesh is a structural positive as per the analyst, and this positive might be priced in as this news has been in the market for some time now, but there is an official confirmation coming in right now, and the Andhra Pradesh said would have also looked to bring down the prices, which may accelerate the growth in the times ahead. So this is indeed positive for stocks like United Spirits, Radico Khaitan as well as United Breweries, and analysts believe that this could lead to a 2.5 to 3% addition in their EBITDA for FY26 when it comes to United Spirits. Similar range coming in for UBL as well as Radico Khaitan can benefit their EBITDA in the range of 3.5 to 5.5% for FY26. So indeed, all these counters are in focus on the back of this positive news flow.
All right, another counter that is in focus today is IIFL Finance. Gaurav, tell us, this counter is reeling under pressure, really taking it on the chin, trading with cuts of more than 7.5%. Tell us, what is the news flow here?
Well, yes, IIFL Finance is seeing some kind of pressure in the stock price, and the reason being that as per agencies, now the company is facing downgrade risk on the back of the gold loan back that we have seen for the company. Now, local rating agency has informed the company about the possible re-rating. The rating can change from AA to AA minus, so a D-rating is something which is possible, and sources also say that the firm could cut more than 9,000 jobs if the regulatory ban persists. Now, when we talk about the ban, let's see what the ban is for IIFL Finance. It recently started in March 2024. RBI actually banned IIFL Finance from sanctioning and disbursing any kind of new gold loans to certain material because of the certain material supervisory concerns that they saw. And gold loan, if we look at the total loan book, it contributed around 30% of the overall loan book for IIFL Finance. Post RBI ban, we have already seen that the stock has fallen almost by 19%. There was some recovery lately, but after this news, we are seeing again there is some pressure. Stock is down almost 7.5% as we speak.
All right, that is IIFL Finance in focus today. But moving on to another counter, REC, that is in focus today on the back of the fact that they have signed agreements valued at 1 lakh crore rupees to fund various renewable energy initiatives. Now, the agreements reached at a recent industry conclave target projects scheduled for implementation over the next 5 years. Now, the MOUs cover a wide array of green energy projects, including solar and wind hybrids, round-the-clock solar and wind power, floating solar plants, ultra mega renewable energy parks and green hydrogen production. Other focus areas also include hydroelectric projects, battery energy storage systems and solar cell manufacturing. And on the back of that, REC is in focus today. In fact, yet again, REC has cooled off those morning gains. In fact, it is reeling under selling pressure right now. A bit of a profit booking coming in on REC. It's trading with cuts of 5% right now.
Alright, moving on, and let's shift focus to what Jubilant FoodWorks is doing. Ashish, in this sort of a market as well, the stock is holding strong gains of 2%. And apart from that, in this market volatility, no participation, one-way upward trend coming in for Jubilant Food. How do you see this?
Yes, absolutely. If you look at this stock, the stock has been managing to protect its 20 days average and has been bouncing back every single time when it comes there, and it is moving independent to Nifty. That's a very, very positive sign. And despite the mid-cap selling that we are seeing some pressure in the mid-cap stocks, this stock is touching the 52-week high. So the overall trend for Jubilant Food remains positive. Any dips can be used as a buying opportunity. We can aim for the target of around 725 on the upside, and on the downside, one can maintain a stop loss of 675 levels.
Then that's about Jubilant FoodWorks. But moving on, let's talk about Tata Motors then, because today MK has come out with a note where they have upgraded their rating from an ad rating earlier to a buy now with a target price of 1175 rupees. What they're saying is that China is relatively smaller for JLR. The profitability deleveraging story is largely intact for the company, and the demand and the margin outlook is improving for the domestic commercial vehicle business as well. When it comes to the passenger vehicle business, that's relatively better placed than the industry in terms of the new launches that the company is doing, the lower inventory levels and a healthy profitability outlook and undemanding valuation are some of the other factors that MK is bullish on. And on the back of this news flow and this brokerage note, the stock is in focus. But with the markets, the stock has also come off its day's highest point and now trading flat right now.
Well, keeping with the auto space, then Arnab Banerjee, the MD and CEO of CEAT, sees margin pressure on margins and strong top-line growth. He also expects the OEM demand to be flattish and the replacement demand growth to be in the single digit. Let's go across and take a look at it.
OEM demand will be flattish, but the replacement demand is not flat. We are witnessing growth in healthy single digits. And as far as CEAT is concerned, we would like to gain share in the OEMs. Pressure on margin for the time being, though the top line demand outlook looks strong.
All right then, but moving on, let's talk about HPCL as well as BPCL. And Ashish, what's your take coming in on both of these stocks? They are seen to be reeling a bit under pressure.
Yes, if you look at HPCL, I think the stock is under pressure over today, down by nearly 2.6% already. But if you look at it, the fall is not only today's. Over past 6, 7, 8 days, you can clearly see the lower high, lower low formation continues, and the stock, there is no positive reversal that we can see yet. So I think unless we move back about that 410 level for HPCL, their stock can be under pressure. We can expect a move toward the lower level of around 380. And from here, any pullback can be used as a shorting opportunity over short term. And as far as BPCL is concerned, again, the stock is down by nearly 3% and the selling pressure is intensified during the day, and it's trading near the lower point of the day. I think the support for the stock is going to be around 319 levels. So it's going to be important to see if it manages to protect that support on the closing basis at 319 and show some kind of a bounce back. Having said that, the important hurdle on upside is 338. Unless the stock manages to break back about 338, I think use pullback to sell for the targets of 319.
All right, that's HPCL and BPCL for you under pressure. But with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you some more stocks that are in focus today.
If you like this video, then like, share and subscribe to ET Now.